Morning, everybody. It's Chris Robinson, Robinson Ag Marketing with today's pre-opening grain and gray livestock comments for Wednesday, the 15th, halfway through July, guys. Um, as much as I hate the overnight markets, I'm always happy when they're higher. D's corn up 3 3/4 cent, about a 10 cent range overnight. They tried to pressure it earlier. Now we're back up to 67. 70, 75 is the next big uh, resistance tranche, I guess you'd call it. If you're not getting my letter, take a look at it. The 50-day, 100-day, 200-day moving average are all up there. It's also the halfway back. We're right here. 69, 70, 75. It's just a traffic jam in D's corn. Now, are we going to go higher? I sure as heck hope so. I do know this. I don't want to go back down to 425 corn again without some protection on. So capture what you can, leave the upside open. If we do get a rally up to the old highs, have a plan. So I can tell you, I know you don't want to sell it. If you don't want to sell it, you might want to get a better substitute sale, which is what the put is. In the beans, back to almost $12, 11.98 and a half last night. Trading 93 as I'm talking to you right now. We're trading the weather, and I guess the big mover obviously is D's corn. December, September, Chicago and KC. KC up 23 and a half. Chicago up 19 and a half. New high for the move. Completely clawed back over 62% of the last sell-off. So we're at 664, 670. Sep wheat's only 30 cents away from $7, which is where we were. That's a 2-year high, guys. For all the complaining and all the, of course, if wheat's not at $50, it's too cheap. I get it. But you got to look at where we are historically. So this is going to be a great opportunity. I'm not calling it top, but for goodness sakes, um, make sure that you've got a plan. What are you going to do if SEP trades $7 in Chicago? What are you going to do if KC trades back to uh, its old highs? SEP KC's at $7 this morning. What's your plan if we go back to 758? It's only 50 cents. We could be there. The way this market moves, we could be there quickly. So have a plan. Try to reward that. Um, it's a heck of a lot better. A week ago, 2 months, on June 30th, right? Which was 2 weeks ago, we were down at 612. So we've rallied a dollar. If we can get another 50, 60 cents, I don't know how you don't reward that with some sales or some hedges. And again, nobody sells the top. I'm so tired of people, sending me emails saying, oh, this. We're not trying to sell the top. We're trying to catch the meat of the move. We're trying to get you in the upper 30% of prices. There used to be for 20 years, we heard the average um, producer, the average uh, sales are in the bottom third of available prices. There's some better information on that today. It's actually the bottom third. Um, that was the last study that was published. We want you in the we don't want you in the middle third. We want to be in the upper third. Now, anybody that can tell you that they're going to sell you that the last bushel at the high of the day, I would walk away from that person. But we're here to try to make the best cash sales we can. So a big part of that is having a plan. Now, me saying have a plan for 750 KC is not me promising you we're going to go there. But for goodness sakes, if you need to make some sales, last time I checked, if we did get, we're at $7. $7 is a lot better than 612 on the board. And if you're a farmer or producer, I think you need to look at rewarding this, especially if you don't have enough sold. We started the year down at 560, 550. So even that at $7. Um, I don't know how you don't try to take advantage of that $1.50 here right now. We're going to see what happens today in cattle. Cattle's got some big technical levels that's testing, not only in fat cattle, but in feeders. We've done a lot of damage here in the last 12 days. We really haven't had a recovery day in 12 or 13 days. So we're overdue, but it's only Wednesday. And it feels like the last couple days, the funds have been doing some liquidation. They had been long cattle forever. They're probably still long cattle, but they're lightening their load. And then the reverse, they're short a bunch of lean hogs. I was starting to get friendly, the deferred lean hogs. We'd had a pretty decent recovery, $3 or $4. And if you look at the DECE, the deferred hogs, we're right back down to 74. So that's a perfect example of why we don't make the decision. Oh, we don't need our puts anymore. We're going higher. We left them in place. They're still there, and I would suggest keeping them on the books because the market should be going higher. The last hog and pig report was friendly. We didn't get much of a bounce in those deferred. So when the market gets good news and can't sustain a rally, that's kind of always a red flag. Crude oil sitting at $80. It's hard to believe, a week and a half ago we were back down at 67. So we're $10 higher, despite the fact that it looks like the situation in Iran is certainly not dialing back. Okay, guys, this is Chris Robinson, Robinson Ag Marketing. If you're not getting my letter, robinsonagmarketing.com, I send it out every day after the close. I do all the retracements, all the moving averages, all the technicals for you. Why? So you don't have to spend 2 hours doing it. I do it. So I take that off your plate. One less thing you have to stress out about. All right, guys, take care.